Hello and welcome to our webcast. I'm Christine Zucchetti with Moss Adams, and I'm going to get us started for today's session, Cost Accounting Standards, Your Essential Guide. We're pleased that you have joined us today, and now I'm going to play our housekeeping video.
Welcome, and thanks for joining. We're pleased Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances. Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin,
We have 2 presenters with us today from Moss Adams. We have Sheila Herrera, partner, and Karen Melendez, senior manager. Their bios and contact information are located in your webcast console. And now I'd like to turn the floor over to Sheila to get the presentation started.
Thanks, Christine. Hello, everyone. Thank you for joining. My name is Sheila Herrera. I'm a partner here with Moss Adams, and so excited to be here today with all of you. I've been with the firm about 18 years and and spent a significant amount of my time working with government contractors, kind of all shapes and sizes, working through both the financial statement side as well as working with them on consulting through the federal acquisition rules and requirements. And so I'll hand it over to Karen so she can also introduce herself.
Oh, thanks, Sheila. Hi, everyone. Karen Melendez. I'm a senior manager here at Moss Adams, and my focus is working with government contractors primarily to ensure their accounting system and practices comply with government contract regulations. I specialize in accounting system setups, assisting with DCAA audits, and performing gap analyses for CAS readiness for contractors. And I'm also happy to be here with you today to discuss cost accounting standards and how they impact government contractors.
Thanks, Karen. And so we do and have put this content together for you. And so some of the learning objectives that we've identified is really trying to make sure that there's a solid understanding of some of those principles and regulations of CAS and its importance really in the government contract space. We get a lot of questions from clients as they move through this process of their government contract life cycle, and we're really trying to provide them some of the detail information as relates to the compliance. And so we've identified some common pitfalls that they fall into sometimes when they start to implement those CAS requirements, and just making sure that we're talking through things. How can you avoid them? How can you be prepared a little bit differently maybe as you get into your contract life cycle, or if you've already kind of hit the requirements to be in modified or full CAS requirements. How do you start thinking through some of these things that, we maybe identified, or talking with your accounting professional about how do you get in front of those? And so really thinking through those strategies as we move along here through the presentation. And so for those of you that don't know who Moss Adams is, we did put some FAQs on here for you all to read through, but also did want to just say we're a firm that's been in business a very long time. We do specialize and focus on industries. And so we do have professionals throughout specific industries that are really good at what they do. They know the industry. And so we've created this government contract solutions group specifically to help government contractors when you do have questions, for example, related to the FAR, or maybe you have something from a DCAA compliance perspective, that really can reach out to one of the dedicated team members here on this call or throughout our firm and say, we have these questions or answers, and so we're here to help, figure that out. And so these are some of the things that we do focus on within the solutions group. We, again, help all different types of industries. We're really industry agnostic from that perspective. And so some of the things that Karen mentioned are on this list, just related to things like indirect reg preparation, some of your 1408 system. We get a lot of questions for the CAS specific. How do we do this, or how do we make sure that we're compliant in these areas? The cybersecurity, we actually have a whole IT group that does just that. And so they've been working with contractors for a long time and are very much on top of the new CMMC requirements. So just pointing those things out, that we have resources throughout our firm that can help not just the two of us here, but other partners and other senior managers in the firm that can help in some of these areas. And so I think we have our first polling question, Christine.
Yes, thank you. How familiar are you with the cost accounting standards? A, very familiar. B, somewhat familiar. C, not very familiar. D, not at all familiar. The polling questions are located on the right slide we are presenting. If you can't see it, you may need to hit the F5 key to refresh your console. To respond, please click the button next to the answer you choose and make sure to hit the submit button. I'll give you a few seconds for everyone to respond. All right, I will submit.
Looks like we have a mix on this call of somewhat familiar and then not very familiar, and then a few kind of in this very familiar or not at all. Karen, if you want to get us going.
Yeah, sure. Thanks, Sheila. So before we dive, into some of the details on the cost accounting standards, it's important to, understand their origin and how they came about. So back in 1970, the Cost Accounting Standards Board, also known as CASB, was established by Congress to ensure uniformity and consistency in cost accounting principles for government contractors. And their goal, was really to regulate contractors, subcontractors, and require them to disclose their cost accounting practices in writing, and hold them, consistent for following those policies consistently. After adopting those initial 19 standards, the original CASB was dissolved in 1980. However, it was revived in 1988 within the Office of Federal Procurement Policy, and the current CASB consists of 5 members. So the chairman is the someone from OFPP. There is a member from the U.S. Department of Defense, which is currently held by the director of DCAA. There's a member from the General Services Administration, industry, and the private sector. And really the main areas that the cost accounting standards cover are the measurement of costs. So how are costs measured and calculated? The assignment of costs, what period does that cost relate to, and making sure that it's assigned properly to the proper accounting period, and the allocation of costs. So, how are those costs allocated to contracts, making sure that the contractor has a consistent methodology developed and that they're following that. So, keep in mind measurement, assignment, and allocation of costs are really the three principles guiding all of these standards that we're going to cover today. So this slide will provide just some general information on the standards. One thing to keep in mind, CAS, the cost accounting standards, they apply to contracts, not contractors. So there might be a company that has contracts that are either subject to full CAS coverage, where they're required to follow all of the 19 standards. They may be subject to modified CAS, where they're only required to follow 4 of the standards. They may have a mix of both. So they may have some where they're, have contracts that are subject to full coverage, modified coverage, or the contractor themselves may be exempt from coverage altogether. So something to also keep in mind, CAS differs from the FAR, Federal Acquisition Regulation, in that the FAR applies to substantially all contractors, whereas CAS primarily applies to the larger ones as they get into the bigger contracts and their company size grows. So, first it's important to understand and determine if the contractor or the contract meets one of the exemptions. A common example that we see is with small business. So small businesses are exempt from CAS. And the determination of a small business is typically determined by the entity's NAICS code. Based on the industry they operate and based on their number of employees or revenue amount. This list here shows some other types of exemptions. If there's a sealed bid contract, something contracts below the TINA threshold, other things like that. So, if it's determined that the contractor doesn't meet a CAS exemption, then they'll want to look at the clauses in their contract, which will indicate if they're subject to either the modified CAS or full CAS. So the contract clauses to, pay attention to are FAR 52.230-3, and that's going to be the modified coverage clause. And that's going to be triggered when a contractor who's not otherwise exempt from CAS coverage either receives a CAS covered award of less than 50 million, but more than 7.5. So typically that 7.5 million is going to be that trigger contract. Or they can receive a CAS covered award between 2 million and 50 million once they're already CAS covered. And in that case, they'd be subject to the 4 standards, and we'll go through those as we move along in the presentation. The other clause to make note of is FAR 52.230-2, and that's going to be the full coverage standard, and that's going to be triggered when a contractor receives that single CAS covered award over 50 million in a cost accounting period, or if they've received accumulation of CAS covered awards that total 50 million or more. And once full coverage is triggered, they're going to be subject to all 19 standards, and they'll need to submit a disclosure statement, which is the form DS1, and they'll need to submit that, which is basically a document where they disclose and describe all of their cost accounting practices to the government. So here's a list of the standards. They're broken out. This comes from the DCA Cost Accounting Standards Manual, which is it's a really useful document just to, if you need to refer to that for more information. But this table breaks down the 4 the 19 standards into different kind of similar sections. So the first section relates to overall cost accounting matters, and these 4 are going to be your modified standards. So really any contractor that is subject either to modified or full CAS will need to comply with these 4. And then the rest of them, you can break them down into 2 other categories. So the second category, where most of them fall, are going to be classes, categories, or elements of costs. And really, these are going to cover the measurement of costs. So these cover areas such as compensation or assets, insurance costs, things like that. And the last section up here is relating to indirect cost pools. So those standards are going to cover the allocation of costs to final cost objectives and the method, put in place for doing that. One thing to keep in mind is that the timing of compliance for each of these standards varies. So some of them, mostly the modified standards, those are going to be effective immediately, whereas some of the full standards will not become mandatory or effective until a later period, such as like the next cost accounting period after the contract is received. And within the cost accounting standards, within pretty much all of them, it will list when that effective date is. So it looks like now we're up to our next polling question. I'll turn it back over to Christine.
Yeah, thanks, Karen. Polling question number 2. Which of the following is not one governed by the cost accounting standards? A, measurement. B, assignment. C, allocation. D, assessment. As a reminder, if you would like to receive CPE credit for today's webcast, you'll need to respond to at least 3 of the 4 polling questions. Again, please click the button next to the answer you choose and make sure to hit the submit button so that the system can award you credit. And looks like we're good, and I'll pass that back to you, Karen.
Sure. Okay, so it's a pretty even split. The correct answer is assessment. So the standards cover measurement, assignment, and allocation. So assessment's not one of them, but we'll dive, into each of those and how they apply to each of the standards as we continue. So now we'll get into a little bit about each of the standards, give a brief description, and like Sheila mentioned, how to apply it and maybe some of the common pitfalls you may encounter. So CAS 401, consistency in estimating, accumulating, and reporting costs. This is going to be one of the required standards for both modified or full coverage. And really to keep in mind with this standard, it's apples to apples. So the government wants to make sure that the way that you're proposing costs is the way that you're later going to account for those actuals, in your books. So the requirement is, if you have a practice used in estimating costs in a pricing proposal, that's going to be consistent with how you're accumulating and reporting those costs. So one thing to keep in mind is you can have more detail in your actuals than in your proposal, because then you'll be able to map back and reconcile back to your proposal. But if you're the other way around, where you have more detail in your proposal, but you're not actually capturing those actuals at that level of detail, that would be a violation of the standard. So some examples would be, let's say you estimate in your proposal engineering labor by type of function, drafting, production, but when you're accumulating all those costs, you're not differentiating down to that level. That would be something that's not in compliance with the standard because there's no way to reconcile back. So, some common pitfalls are using a different allocation base for G&A in your proposal, but in your actuals you may use a different base. So let's say you use a value added base in your proposal, but your actual practice is to use the total cost input base. So that would be an inconsistent practice between how you propose or accumulate costs. Another example is, like I mentioned, estimating costs at more detail than what is available in actual cost reported. CAS 402 is the consistency in allocating costs incurred for the same purpose. So this is going to be one of the other modified standards. And really the goal of this standard is that there's no double dipping, no double counting of a cost. So, really all costs that are incurred for the same purpose in a like circumstance either need to be treated as direct consistently or indirect consistently. So, one example, let's say you always charge direct travel as a direct cost, because typically up until this point, you've been able to charge that back to a customer. So any travel that you incur for a contract is coded to direct travel. But then you may have a contract that comes along where you're not allowed to bill that to the government. So instead of coding it as a direct cost, you might want to put it coded to an indirect cost. And that would be a violation of the standard, because you would be double dipping. As you allocated that cost out, the contracts that received the direct travel cost would now be getting a double dip of that other one. So it's important to, if you're going to code everything as direct cost, if that's the nature of the expense, to be consistent with that throughout. But on the flip side, you may have a similar cost, but it's incurred for a different purpose. So let's say you're a machine shop and you purchase various types of tooling. If you were to purchase tooling, like special tools for a contract, you can code that as a direct cost. But then if you're purchasing general tooling, for the whole organization that you can use against many different contracts, you'd be able to code that to indirect. And, that's a situation of a similar cost, but not incurred for the same purpose. So some common pitfalls would be kind of flip-flopping, treating a certain cost as direct in some instances and an indirect cost in others, based on a customer preference, like the one I mentioned earlier with billable travel or unbillable travel. And also, when you do have situations that are a similar cost but a different purpose, it's good to document that in your accounting policies, that you're aware that these are similar costs, but since it is a different purpose, it's not in violation of the standard. So it's good to keep that in mind. CAS 403, allocation of home office expenses to segments. So this is going to be a standard applicable with full coverage. And one thing just to keep in mind with all of these standards is that they may not apply to your organization. It really depends on how your organization is set up. If you're, a fairly simple organization with one segment, you may not have a home office segment or a home office to allocate to different segments. But really what to keep in mind here is when you have a home office, basically any expenses of that home office, typically they would be, management, HR type expenses. You would want to allocate anything that's directly attributable to a segment. You'd want to directly assign that to that segment. And then anything left over, you really need to group those into homogeneous pools of what types of expenses are and how should they be allocated in a fair and equitable way to all the segments. So you really want to look at the beneficial or causal relationship between those costs and the segments that are utilizing those costs. So you may come up with an allocation base such as machine hours or labor hours, depending upon the types of costs that you're allocating. And, similar to flashback to CAS 402, you also don't want to allocate a segment an indirect cost if for the same purpose, those similar costs have been allocated directly to them. So some common pitfalls for this standard, lack of understanding of the business structure. Does your entity have a home office? Do they not? Or then inappropriate grouping of expenses into those pools. So, you want to make sure you're keeping like expenses together into different pools based on how you're allocating. CAS 404, capitalization of tangible assets. So this is another full coverage standard. And this one's, often aligns with GAAP. So, and it also goes hand in hand with CAS 409, which we'll talk about a little bit later, that handles depreciation. But basically, the requirement here is that a capitalization policy needs to be put in place for tangible assets, and the contractor needs to define a minimum service life. So that cannot exceed 2 years, but they can use a shorter period. And they need to come up with a minimum acquisition cost that they're going to capitalize, which cannot exceed 5,000, but it can be a smaller amount. So what's important here is that a contractor comes up with their capitalization policy and that they follow it consistently and they document it. So for example, if they come up with a policy that they're going to capitalize anything with a 1-year useful life or greater and anything that's over $2,500, they'll want to make sure that's documented and that they're, following that consistently. And some pitfalls in this area are, lack of proper policy or just not following it consistently. So, training of your, AP department, accounting department is really important in this area. CAS 405, this is going to be one of the modified standards, and this is going to closely mirror FAR 31.205, which covers unallowable costs. And really what to keep in mind with this one is, there's costs that are expressly unallowable according to the FAR, and there's also costs that are mutually agreeable to be unallowable between the government and a contractor. So you really want to make sure that you have a method in your system to identify those costs as unallowable so that they're not included in any billing or claim or proposal to the government. Two other things to keep in mind with this standard is, once you identify those unallowable costs, if due to the nature of those costs, they would ordinarily fall into one of your allocation bases, then you need to make sure they remain in the base, even though they're an unallowable cost. And also any costs that are incurred as part of an unallowable cost would also be unallowable. So an example there, let's say entertainment, that's an unallowable cost. And if your company takes out some customers or clients or employees to a baseball game, which, clearly the baseball game would be unallowable. But then you need to make sure that the travel to the game, which, travel would ordinarily be an allowable cost. You want to make sure that that travel to the game is also included as an unallowable cost. So some examples of expressly unallowable costs would be, alcohol penalties, advertising, lobbying, bad debt expense, and things that might be mutually agreed upon to be unallowable might be like in the situation I mentioned earlier, where you might not be able to bill direct travel or materials to a contract. So that would be an example of something that's unallowable. And common pitfalls, like I think I've already covered those, like lack of understanding of what's allowable versus unallowable in either of those situations, and then also failing to include those unallowable costs as part of the allocation base when they normally would have been if they were allowable. CAS 406, so this is the last of the modified standards, and this relates to the cost accounting period. So really the goal here is that a contractor needs to come up with their cost accounting period, and that usually aligns with their fiscal year. But they need to make sure that they're computing their rates based on that cost accounting period, and that includes, the pool of indirect costs and the base that they're allocating against need to be representative of the same period. And they also need to just make sure that any accruals or deferrals or adjustments of expenses also take place within that fiscal year. The next one, CAS 407. So this relates to the use of standard costs for direct material and direct labor. This is another one that may not apply to all contractors as it addresses standard costs. So that's usually like in a manufacturing environment. So it would apply to, direct materials, direct labor. And in this case, really standard costs, you'd have like an expected or pre-established cost that you put into your accounting system, and you account at the lowest level for that. And really, you would, have to document your process of how often you're disposing of those variances. Make sure you have a written policy, like how did you come up with those standard costs, like what is the source of data, what are your assumptions, and really make sure that you're following that at the level of production unit. So some of the common pitfalls in this area would be lack of policy documentation, maybe not having a clear process in place for setting and revising those standards, how you're going to, analyze the variants and dispose of them, and, really how you're establishing those standards from what data sources. CAS 408, the accounting for costs of compensated personal absence. So this is also going to closely align with GAAP. It's a full CAS coverage standard. And really, this is going to relate to the cost of compensated personal absence, such as vacation time, sick time, holiday. And the requirement here is that the contractor assigns the cost to the cost accounting period where that entitlement was earned. So, typically sick time, jury duty leave, holidays, those aren't typically, paid time off that an employee would accrue over time. They would typically gain that entitlement once that day comes. So that wouldn't necessarily be something that you would recognize ahead of time. However, vacation accrual, vacation is typically paid time off that an employee earns over time. So it's important to really understand, what is that vacation policy? Do they earn that throughout the year evenly? Or does an employee get granted their 15 days on January 1st and they're entitled to those days as of that time? So that's really something to make sure that you're understanding, when is that entitlement earned by your employees, and making sure that the accounting and assigning that cost to the right cost accounting period follows that. The other thing to keep in mind is that when employees get raises, their vacation balance, may change, because if they're going to get paid out 20 hours at their prior rate or their new rate, that would be a difference. So you really want to make sure that you're also adjusting those on a regular and timely basis. So, one of the pitfalls here would be lack of understanding of paid time off. So it's really important for, the accounting department and whoever is recording that accrual to be in sync with what is in place for employees. CAS 409, depreciation of tangible capital assets. So this is the one I mentioned earlier with CAS 404. This one's also going to follow GAAP, pretty closely. So one thing to keep in mind, the requirement under this standard is that the depreciable cost of an asset shall be its capitalized cost, which we talked about in CAS 404, less any estimated residual value. So, you're not going to necessarily depreciate an asset down to zero, but you're also going to come up with an estimated life and a method of depreciation. And you want that estimated useful life to represent the period that you'll be receiving a benefit from that asset, and that cost will be allocated over that period. And you want to come up with a depreciation method that's going to represent the pattern of consumption. So, straight line is a pretty common one, but you want to make sure that you're documenting that policy and that you're following it consistently amongst all asset classes, throughout the life of the asset. CAS 410. So this is the allocation of business unit general administrative expenses to final cost objectives. And really this covers all the G&A expenses of the business and how are you allocating those to final cost objective. So, by G&A expense, what we mean here is any management, financial, or other expense that's incurred by a business unit, which is really for the general management or administration of the business as a whole. You know, this doesn't relate to any of the costs that are direct costs or overhead costs, but it's really, you know, the general cost of the business. And those typically will get segregated into one indirect cost pool, and then it will go directly to final cost objectives based on an allocation base. So the purpose of this standard is to you know, come up with a base that's representative of your business. And you know, the three acceptable bases that are listed in the standard are total cost input, which is basically all costs of the business, excluding G&A. So this is a generally acceptable method where you take all of your costs and then you allocate across all of that. A value added base is going to be pretty similar to total cost input, but you're going to take out direct material and direct subcontract costs. And this base may become appropriate for you if you have contracts that consume a lot of materials or subcontractor expenses. Because when you're allocating G&A to them, you might prove that it's an inequitable allocation. If you have a lot of contracts that have no materials or subcontracts, and then you have one that has, you know, a disproportionate share, they're going to wind up getting a bigger portion of that G&A. So, you know, if that's not something that you think is appropriate, you would, you know, potentially choose a value-added base. And then the last one would be single input base, such as direct labor hours. That may be a representative of the total business of the business unit. So if that produces equitable results and you put that in your policy, then, you know, that's another acceptable base to use. So some common pitfalls are, you know, choosing a base that's not representative or, you know, switching the base. So you really want to make sure that you have documented, you know, why you're choosing that base and what that base is. And you want to be consistent in your proposals and your actuals. So now we're going to move on to the next polling question, I'll give this over to Christine.
Thank you, Karen. Yeah, polling question number 3. Which of the following is not a modified CAS standard? A, CAS 401, B, CAS 402, C, CAS 404, and D, CAS 405. Also, you do have the option to submit questions for the presenters in the Q&A window. We have quite a bit of content to cover today, so if we don't have time to respond during the webcast, we will do our best to follow up with you afterwards. Just wait a few more seconds. All right, Karen, here are the results.
Oh, wow, great. Another split, but the correct answer is CAS 404. So they kind of go out of order, but the modified standards are 401, 402, 405, and 406. Okay, so thanks, Christine. I'm going to turn it back over now to Sheila to take you through the rest of the presentation.
Thank you, Karen. And so we're going to start back up with CAS 411. And so this is really the accounting for the acquisition costs of material. And so if you go through this requirement, really this is saying that the contractor really shall have and really consistently apply. We've talked a lot about policies and procedures, but they want you to have really consistent written policies for how you're accumulating and allocating those costs of material. The next thing they want you to do is look at costs of units related to a category of materials that may be, you know, allocated directly. You're providing the cost objective that was specifically identified at the time of purchase, or if you're producing units that you can see what those costs of those individual units are. The cost of material, which is used solely in indirect functions, for example, or is really not a significant element of the production, may be included in an indirect cost pool. And so really knowing and understanding your costs is important on how you're accumulating those costs, how you're tracking those costs. And then really, if you get to the point of how does it go back to your inventory records at the end of the day, how do you make sure that you see where those costs are moving along in the process? And so you do have some methods that are allowable to follow under the FAR standards and the CAS compliance standards that you can follow. So you have your regular costing methods for inventory, such as your FIFO, your LIFO, your weighted average, and then your moving average or your standard cost. And so when you go back to what are the things that we typically see where people struggle is really the lack of the written policies and procedures, specifically relating to the material acquisition and inventory costing methods. And a lot of times, as you all move through your life cycle of production and things change along the way, some of those policies do get outdated. And so you really want to make sure that those are being consistently just followed as well. And how are you assigning those material costs to the specific cost objectives? And so then moving on to CAS 412, the composition and the measurement of pension costs. So a little bit different than some of the other things that we've talked about already and that Karen, worked through on the other CAS requirements. This is really diving in specifically to that measurement portion of the pension cost. And so there's really 4 components of a defined benefit plan. And so those are the normal costs that you incur. You may have a part of an unfunded actuarial liability that you may have sitting out there. You could have an interest equivalent on an amortized portion of a liability, and then an adjustment for actuarial loss and gains. And so really understanding, what type of benefit plans that you have, how are those costs being accumulated, how do they go onto the balance sheet, for example, if they do go onto the balance sheet. For some of your defined contribution plans, the cost is the net contribution required to be made for that period. And so there may be a cash accrual amount that you'd have to consider as part of this process. For measurement of the defined benefit plan costs, sometimes you have to go through that actuarial cost method, and you actually have to have an actuary look at what is our liability here, how does that cost measure for some of these components as well. And so really thinking through how is our company operating some of these defined benefit plans. And then really the costs that are being computed for the cost accounting period are only assignable to that period and allocable to the cost objectives to the extent that the liquidation can be compelled or is actually affected. And so many of the things that we see sometimes is that the companies or you're kind of failing to look at the pension costs and total compensation calculation with respect to the FAR compensation limits. And so that does get included when you're looking at some of those high salary individuals or high rate individuals. When they go into that compensation bucket, you could end up in that unallowable if they go over the category with those defined compensation amounts included. So CAS 413 follows up on the measurement of the pension costs. This is really the adjustment and the allocation of those pension costs. And so once you know what the measurement piece is, how are those getting allocated out to the individual contracts, for example, or how are you allocating them within the books and records to show, what that value that's being assigned to is actually allocable. It's that you've adjusted it for each amount that in the segment where participants are maybe in the pension plan. And so really thinking through, once we identify what the measurement of the cost is, how is then that being allocated to those segments, where those participants are in the pension. Not every person participates sometimes in the pension plan or is part of that cost. And so really understanding, because you have to prove that out in your cost accounting standard and where those costs are really at the end of the day. And so sometimes I think that ends up being a little bit of a manual process because the system, your accounting system may not be able to easily track that. And then CAS 414 is the cost of money as an element of the cost of facilities capital. And so this one tends to be, I think, a little bit confusing just because it is terms kind of outside of the regular tax term or either GAAP term even. And so really the standard is that contractors should, it's something you should look at, especially if you have large fixed asset base. With the interest rates rising, it may have a big impact on costs that you are able to claim. The investment base that is being used in computing the cost of money for facilities capital should be computed from the accounting data used for the contract cost purposes. And so that cost of money rate really is coming from some of the public laws that are out there at the time that you're calculating the rate. And so there are public laws referenced in the CAS that you'd have to go back and say, okay, this is really what's out there from the discount rate perspective, for example, and look at that. And then really computing for each contract, how are you using those facility cost of money factors for each of those accounting periods that you're looking at. So it is a little bit of a harder concept, I think, when we talk to some of our clients to get your arms around what is this calculation, how do we make sure we're capturing the right data for this information, for this calculation. We do see a lot of questions just come into that, and there are specific definitions of what kind of gets included in the calculation as well. And so CAS 415, accounting for the cost of the deferred compensation. And so this standard is really meant to look at, you may have ESOP plans that are sitting out there, or you have other deferred compensation plans that you do provide that benefit to your employees. And so there are calculations that are likely being done for some of those plans. Some of it may be you have an actuary that comes in and does the calculations for those plans. You may have some very complex present value calculations that you're having to do to come up with what is the potential liability related to these plans. And so the requirement is that, if you have a deferred compensation plan, that cost shall be assigned to the cost accounting period in which the contractor incurs an obligation to compensate the employee. And so some of those agreements are set up in a way that is very specific. They may have vesting periods. When are you actually required to compensate the employee? Sometimes there's performance obligations within those contracts. And so really understanding kind of the legal terminology that first follows those agreements with some of those employees. Sometimes it's a little bit loose. And so really going back to the original agreement that you maybe have put in place. Does this even, get you to where you need to be to show what the obligation is? And then the next step is if there's no obligation that's incurred prior to payment, the cost of the deferred compensation shall be the amount paid and shall be assigned to the period in which the payment is made. And so really going back to what is the obligation at that time to the company? Is this required to do we have a potential liability now? Maybe you don't, and maybe it's really at the time of payment. And so understanding how those agreements work, what the legal language is. And then sometimes you have to go through and, do the measurement of some of that from a present value perspective. And so the measurement of the amount of the cost shall be at that present value of the future benefit to be paid by the contractor. And then the cost of each award, really you need to consider those separately unless there's a group basis that could be measured with a reasonable accuracy, because sometimes, if you look at where the cost is being allocated out for some of these deferred compensation plans, you really have to think through where is that cost also going in the allocation process. So similar a little bit to the pension costs, your deferred compensation should also follow those employees that are working in those categories as well. And so CAS 416, this is the accounting for the insurance cost. And so you have typically a couple of categories related to insurance. It's pretty straightforward generally. You may have the purchase premium type plan where the cost should be allocated over the accounting period the policy covers. It definitely becomes more complicated with any type of self-insurance plans. Self-insurance provisions in general have been incorporated into FAR and applicable, to the contractors. And so you really understanding again, from the insurance perspective, what type of plan that you have. Do you have that purchased insurance plan where it is the cost of the premium? Or do you have the self-insurance where you could have the cost, which also includes going through that actuarial estimate of projected losses for the period and the administrative costs that follow. And so the company usually pays some actual cost of claims as part of that self-insurance. And so really the requirement is that, going through the cost of that compensation and where the obligation is, and how does that get allocated to that group of employees is important. And so some of those common pitfalls is to really think through the assignment of the premium costs, if you have those across the policy period, and then failure to obtain a written plan for self-insurance costs over the $200,000. And so that is part of the CAS requirements, that if you have those costs, you really have to have a plan in place that you're expecting these costs to go greater than this dollar value, and then you have to have that approval at some point if it does go over that amount. And then CAS 417 is the cost of money as an element of the cost of capital assets under construction. Some of these titles are very long, sorry for the long-winded responses here, but really here the requirement is that it is applicable to investments in intangible or intangible capital assets being constructed or fabricated or developed for the contractor's own use. And so really looking at, do you have any types of those projects? And if you do, how are those costs being tracked? Are you capitalizing those costs? Really, because those costs should be capitalized potentially at acquisition. And so thinking through what those costs are. The cost of money rate is based on those interest rates, again, determined by public law. So the Secretary of Treasury does post those. And then really the representative investment amount is determined each period for each capital asset that's being contracted or fabricated or being developed, kind of given appropriate consideration to the rate at which the costs of construction are incurred. And so some of the common pitfalls here that we do see is just the incorrect calculation of that facility's cost of money. And so this, again, going back to a previous CAS requirement, that calculation is very complex. And so really understanding how to calculate that, not using the treasury rates, for example. Sometimes the calculation itself is not in the proposal. And so generally, if it's not part of the proposal, those costs are unallowable. And you can't say, like, we have these costs, we want to be able to get reimbursed for some of our costs related to our own facilities. That's not going to, be able to get you the reimbursement that you might need or want as part of it if you're not thinking through it at the proposal process. So as you're doing your pricing for proposals, have that conversation internally. Should we come up with a rate and a calculation to say, oh, we have this, is this something that, we can get reimbursed for? And then CAS 418, the allocation of the direct and the indirect cost. I will say this is probably one of the ones that we get a significant amount of questions about, related to what is considered a direct cost versus an indirect cost. Even if it's directly allowable in our contract, how do we make sure that we're accounting for this appropriately? And so really having those accounting policies that you would have in place, are they written? Are you consistently following them? How is our accounting system tracking all of this cost? How are indirect costs accumulated into each of the pools that we're intending to use? And really, is that meeting the pooled cost objectives at the end of the day? And so a lot of times, if you're looking at what's going into those cost pools and really not paying attention, you're going to end up with things in your base. You're going to end up with things that are part of your calculation that may not be allowed to, that are not allowed to be in there. So really thinking through that and the consistency again. So we do see just a lot of areas for improvement here related to consistency or written documentation related to the direct and indirect cost pools, and really some of the relationships between the costs that are being included. And so CAS 420, accounting for the independent research and development and bid and proposal costs. High level, I will say this is one area where just the identification of this cost is important. And are you tracking these? I won't really go into the detail of the requirement here for the sake of time, but I do want to just show that that's one of the pitfalls in just segregating those costs away from the other indirect cost pools, and just keeping those costs in mind as you move through your contracting life process here. And so just some common in general pitfalls that we see, is inconsistent application of the process and the policies and the practices around the cost accounting standards. A lot of times we are seeing just turnover, for example, at some of the companies, or some of the historical knowledge of some of these standard requirements has left the company. And so really taking that opportunity to train staff along the way. Sometimes they're just checking a box. And so how do you get out of that cycle where they are checking a box? How do we make sure that, they're actually providing the adequate staff training for staff to go through and meet the compliance requirements? Are your policies up to date? That's a big one. We've said that on every single slide, I think, and just making sure that you do have updated policies and procedures along the way. As your company grows or changes, or you have different types of contracts that may need to be looked at again, and are you actually following what your policy says? Maybe you've changed something internally and you need to update your policy as well. So really understanding that part. Not tracking the value of the contracts at the time of the award. There's a lot of tracking from a compliance perspective that needs to be done. And so really, what are you doing internally? How do you get in front of some of these things? Maybe you don't have to be fully CAS compliant at this point. Maybe you're modified, but you can start getting things ready along the way to get to that full CAS compliance. Even if you don't have a disclosure statement, requirement, for example, start looking at that. If you need one, it's really hard to get it done in 30 days. And so start thinking through that process a little bit of how can I be proactive? What would go on here? Do I have everything in place that I need from the government perspective to actually, put in our disclosure statement? And so I think this is the final polling question, Christine.
Yes, thank you, Sheila. For our polling question number 4, does your company have any CAS covered contracts? A, yes, we are subject to modified CAS. B, yes, we are subject to full CAS. C, no, we are exempt. D, I don't know. For those of you that would like a copy of today's slides, you can download them now from the console. We'll also be sending them out via email tomorrow, along with a recording of the webcast. I'll just wait a few more seconds for some responses. All right, Sheila, I'll pass that on to you for the results.
Sounds great. Yeah, it looks like a mix, maybe some learning to figure out if you have those or you don't, or if you're going to be subject to them at some point. You do, again, want to be prepared if you are going to be subject to that requirement. And so it is one of those things that you should start moving along the way and not jump right into it. Again, if you have 30 days to figure it out, it is a very short timeline. And so there are some resources out there specifically for cost accounting standards, and really some of the audit programs even that the DCAA follows and uses, and some Q&As and those types of things. And of course, we're always a resource, but some of these are really helpful in just understanding some of those requirements under these standards. And so did want to say thank you again. Here is our contact information for both myself or Karen, both our emails, direct phone numbers. You can also reach out to us on LinkedIn. Happy to answer any questions that you may have along the way, or if there's something here that you want more information on, also willing to provide that over to you. And I think we're out of time for today. We do have, I think, at least one or two questions that we didn't already answer as part of our presentation. So we will do our best to follow up on those timely. But if there is anything that you want more information on, please feel free to reach out. And I think from our perspective, Christine, if you want to close us out. Well, thank you all for all your time today. We sure appreciate, joining us, and have a good rest of the day.
Thanks, everyone.
Finally, here's a link to the survey for today's presentation. Your feedback is always appreciated. Again, thank you for joining us, and take care, everyone.